What is up, and good morning, ladies and gentlemen, and welcome to this morning's the weekly Rise and Shred with myself, Josh Pitts, and the ever entertaining and always insightful Jacob Gaffney. Morning, sir. What's up, Jacob? How are you, brother?
How's it going, man? What's it like over in your part of the planet?
Dude, it's cold. It's frigid here in Utah, but we need snow. I'll be honest. It's the lack of snow gets me nervous. We don't have last year was a big drought in Utah. I don't have a lot of snow. We were hoping for snow this weekend, but it never came. So I'm a little bit nervous. What about you? How about your state?
Well, it snowed here in Dallas, Fort Worth. We got about an inch, solid inch of snow. Yeah, wow. Very rare. That was about 2 weeks ago. Not something you see, but not really the snowpocalypse that New York experienced some years back that closed everything down for months and months and months, which is why I think it's wild that you would actually want snow, because from an economic perspective, snow is one of those things that just tends to shut things. Maybe that's what you need. Maybe you need a break. Is that what you're saying? You need a break. You need to get out on the slopes, and you need to chill for a bit.
Like here in Utah, we want snow because if we don't get snow, we get no water. Like we want snow because our reservoirs, like just because living in the high desert that we are, if we don't have snowpack in the mountains, we can expect a really, really drought, like a really bad year. And already last year, we suffered a really, really bad drought. We didn't have good snow in 2019, 2020. So we are all hoping for snow. And to be honest, man, it is just not come yet. So we're crossing our fingers. We're hoping for a better year, but so far it just has not come. But we got bigger and better things to talk about than that today.
Yeah, it's huge. The market is huge. It's crazy. It's uncertain. There's a lot going on, and let's start with what we decided to title this show. I'll let you tell us what was our decision there.
$1 trillion market, because right now, like, we have a lot of money. At Rise and Shred, it seems like daily we're talking about another company raising capital or going public or doing this or that. There's a lot of money within our industry. And as I titled it, the money is flowing like the salmon of Capistrano, because if you get the reference, you know where I'm coming from here. But it is. But at the same time, Jacob, like, it's kind of getting messy in our perspective. It's kind of, to me, it's almost a little unstable, but you've been doing this a lot longer than I have. You've seen a lot more than I have. So what are your thoughts on this?
Messy is a good word. Messy is a good word. And let's pause for a second and let's talk about messy. Okay.
Sure. Okay.
Right now, let's go straight into the headlines. Okay.
Okay.
We have a Texas realtor went up to participate in the Capitol riots. She says her business ruined. The FBI is charging her. She says the president told her to do this. She thinks she's going to get a pardon. She's not going to get it. Right.
No way.
My point of bringing this up is like this kind of business behavior. I wish we could say that she was like alone in what she was doing, but there is a lot of bad business behavior. People are getting messy right now. They're doing things that are crazy. And I think it's just part of the transition. We have a new administration coming in. We can talk about that in a second. But I want to talk about what's even messier is the CEO of a major bank dropping S-bombs in investor calls because he's so scared. And he says everyone else needs to be scared about all the crazy money that's going into fintechs right now.
Yeah,
so
for sure.
So you want to talk about the IPOs? I mean, we need to look at the Series Bs, the Series Gs, everything that's going in. There's crazy money going to fintechs, and they are looking to disrupt our business. They are looking to get in there and mess up with the banks, and it's got them scared. And during that transition, it's going to just be a huge money grab, and it's just going to be messy. It's going to be messy, messy, messy.
How soon is it going to be messy? Like, real quick, like, can we expect, again, this week, we're getting a new president in office. There's, again, with all these Series A's, F, G's, all this money coming in, how soon is it going to get messy real quick? Do we have time? Like, what's timeline-wise when we say messy?
All right. So let's put it in the context of what's really something we can expect and something we can call. Okay. All right. Check this out. Okay. So you got all these people in forbearance. Okay. Think about that. That's millions, millions. Okay. They need to come current. None of the sub-servicers in our space have the bandwidth to deal with this.
Ooh.
I mean, they're not returning calls. They're not returning emails. They're not communicating with home buyers. They're much less not reaching out to home buyers to try to solve this, right? So you got all that happening. That's one little bucket of shame for our industry, to be quite honest, that servicers haven't been able to deal with the provisions of the CARES Act effectively, right?
Sure.
So keep that. That's on the side. Okay, keep that in the back of your mind. That's happening in the industry. Meanwhile, we're projecting $100 trillion origination. So where's your focus? Where's your business? Are you working on purchase lending? Are you working out your distressed debt? Are you going to try to refi these borrowers? For the people who have lending and a servicing ticket involved, how do they prepare for that? How can they build their business when the business that's already associated with them is suffering? So where do you put your, that's what's messy. That's what's messy. So all of it's going to come to a head in whenever you ask me when, I'll say
yeah, okay, for sure.
Whenever the forbearance runs out, it's going to be a difficult time for the industry, because it will be an unprecedented issue that we have yet not solved a problem for. Servicers have had 9 months to put in place all these disruptive fintechs to somehow solve the problem, but there's been such a money grab. There's been such a lack of qualified people working in our industry, and I can't blame them. It's a training issue, Josh. It's not a training issue. You're bringing over people from here, from there. You're bringing them in, and you're like, boom, you're an underwriter. Boom, you're an underwriter. Boom, you're an underwriter now, right? Give me a break. Give me a break. You know, and you want to promise this great customer service. Look, we're all so focused on grabbing money right now that none of us have a strategy for organizing our wallets.
Ooh, which is kind of that very, very true. And I don't think a lot of us are thinking about it in that aspect. Is we're just so focused on the here and now. We're focused on the business. And even then, like, where do we even focus? Like you mentioned, are we focused on originators as a whole? We don't even know where to focus our efforts. And that mid-level management, nobody has any idea right now. So it's a little bit intriguing, to say the least. I don't know if even intriguing is the right word, but it's going to get messy quick.
It is. So what's positive? I mean,
yeah, let's talk about positive.
Let's positive. I mean, these are good problems to have.
Sure.
All right.
Growth.
This is not 2009.
Right.
You know, we're not all got our eyes glued to the implodometer. Right. So that's good. That's good. But the issue is whether or not the incoming administration will foster this prime lending spirit that we have. You know, what will it look like? What will it be like? And judging by his appointments to cabinet, the one issue we have is that he will make a stronger CFPB. There will be a strong regulatory environment, but we know that takes time to put in place. So what I think needs to happen is things to remain the same. And it looks like they're going to say that. So the Fed, Powell, was saying that, you know, that the zero interest rate policy that is currently in place, that is fostering this nice spirit that we have where interest rates are so favorable for lending, that's gonna be in place for a long time. So as long as that's there, and you consider that as like the basis of our operation. So will interest rates go up? Yeah, they'll go up. You know, we talked about this in Rise&Shred. They'll go up, they'll go down, they'll go up, they'll go down. Will they jump, you know, an entire percentage point week on week? No, but it's not going to be anything that's not going to be adjustable. I think the important thing is and what I've seen this at a few places. Now, there are a few places, and we'll talk about this soon. There are a few places that are absolutely crushing it. I mean, most people have doubled, tripled, quadrupled their volume in lending and all that. That's fine. But there are a couple of shops. Yeah, a couple of shops that have done like 10, 20 times the business. And it's because they laid out a roadmap. They communicated what they needed to do. They had a strategy in place. And those are the mid-tier, lower lenders did that. The big guys, you know, their scalability, it's been more of a challenge, but they'll be okay because they're raking it in. So
for sure. Well, this goes perfectly in line with this comment from Michael Kelleher. And Michael, thanks for the comment. Communication. Why do so many lenders say we don't want to over communicate? Jacob says now is the time to over communicate, which is true. That goes exactly to what you're talking about. Is going back to our show last week, is communication is absolutely critical right now. And especially times like this, especially that we're in messy situations. If we're not having those conversations, if we're not kind of an open book, then we are missing out on opportunity. We just don't know where to even plan for. We don't know what to do in the future. That's why communication is absolutely critical, which again plays to this next question. Jax from Jackson Ball on LinkedIn says this. So how do we best train ourselves to get in front of all this, Jacob? What do we do here? What's the best way to really get prepared for this?
Well, you know, I was a professional youth soccer coach for nearly a decade. And I will tell you this, I don't think you can over communicate. I think what really happens is when things fail is you're poorly communicating. I know myself, we've had conversations about this, Josh, when I was, you know, running Housing Wire, there was times where I felt like I was poorly communicating to my reporters and my editors the direction that we needed to go. It happens. So the first thing you do is you admit, all right, you look at your business, things aren't working out. So you run that self-audit in your head. What am I doing? Okay. That's what you have to take a look at. Like, what are you doing? You're not communicating effectively. And what I mean by that is, like, you have to have the causality of relationship. This is the problem. How do we solve it? Open it up to your team. How do we solve it? Listen to them. Stop talking for once. Can you believe that? I do actually stop talking sometimes, Josh. It might feel hard to believe. I do, and you have to really listen. And listening isn't just sitting there and going,
right. Just the head nod.
That's not listening. Listening is when you're thinking about what someone told you 12 hours later. That's what's listening. If you're having conversations with your team and you're not thinking about it when you wake up the next morning, you didn't listen. So if you don't start there, you're not going to be able to finish strong. So that's step number one.
Okay. Let me ask you this. Are some of these big companies, these big lenders, some of these fintech companies that we're seeing all kinds of money come into, organizations that are changing, are these big organizations capable of listening? Can they listen? Are they going to listen to us as the general public within the industry? Are they going to listen to what we have to say? Is it valuable, I guess?
Absolutely not. They will not listen to you at all. The bigger players in the industry are so concerned with maintaining their market share and fighting amongst each other that they're not going to really, they're not going to pivot at all. They're just going to stay the course that they're on. What I'm talking about is I'm talking about the rest of us, right? Sure. The people who can make a difference, the people who can make a change every day. You know, it's not something that needs to happen overnight, but when the industry gets messy in time, people will not return their business to these big companies if they continue to operate like this. So keep that in mind.
Good point.
That's your strategy. So where are you in 6 months? Where are you thinking when someone has a Rocket Mortgage referral and they're sick of the call centers? When they're sick of going through the emails, when the servicer won't reach out to them and it's been 2 weeks, right? So, I mean, it's just been crazy. You're talking about someone exits forbearance. You know, they get a call from a servicer. They say, okay, they think it's a qualified underwriter, you know, who's going to refi their loan, help them out. It's not. It's some person with a script saying, hey, you know, you're coming out of forbearance. Here are your options. You know, they lay it out. I think all of that is just completely crazy. The inability to reach out to the homeowner and to touch them. And then what happens is more and more you have these borrowers exiting forbearance that are not restarting their loan the way they thought. And they're getting no communication. They're getting no information. So now they're going to look to refi out of it because they're so sick of dealing with this servicer. They're going to look to refi out of it. They're going to plop their information, you know, into LendingTree. They're going to plop their information in the same places that they did before, and it's going to come up, and they're going to see these other companies. Now, the question is, and I asked you, Josh, as originator, how do you get to them? So I'm telling you that there's this huge market of people that want to refi that are unhappy with their current lender servicer agreement because of this whole forbearance thing, because they see how busy they are and they can't get to them. How do they get to them?
and content, being out, putting yourself out there, doing what we're doing right now. That's how we get to them. That, in my opinion, that's what's working. And I see it because I see with the conversations I'm having with those in the trenches in origination. So that's where I say.
Yeah, I do think that there's market there to get. I do think there's successes that could be had for people who are looking at it in the right. More importantly, I think that, you know, we have to reach these homeowners because they need this help. You know,
yeah.
I think there's a huge, and we don't even know yet. I think there's a huge bucket of homeowners that are delinquent and don't even know it.
Really?
And I'll tell you why I think that. Yeah, I'll tell you why I think that. Okay, so I think that in order to get people out of the CARES Act, I think servicers think there's this idea, and it's not true, but I think they think this idea, if you're non-current on your loan, you can't go back into forbearance, right? So
okay, yeah,
they exit you out of forbearance. You think you're going to make a payment automatically, right? It's just going to come out of your account, like it always did. That doesn't happen. But you've been in forbearance 6 months, so you don't really notice that 7th month hasn't really happened, right? And then all of a sudden, you don't even know it. If you're not checking your credit score, because that's not going to change either.
No, of course not.
Absolutely zero indication to the homeowner that they're suddenly delinquent. So the homeowner is going to want to go back to the servicer and try to get their attention. They can't give it to them and say like, okay, so you know, I gotta work for a living, so I'll shoot an email to the servicer saying, hey, you didn't take my payment this month. You know, what gives?
What the heck?
So it takes 30 days for the servicer to return an email. Right. I'm just telling you, this is just happening. This is just happening, right? Or your sub servicer, especially, you know, you know, they got a nice tech award and they're supposed to be on top of everything. You know, they got an innovation award. And so on top of anything, you know, you know, this is what's when you're Googling your servicer, it's coming up that they want a FinTech Innovator Award, you know, so they're really on top of things according to all these awards that they're getting, which is great, right? But when you get down to execution, so much now, the volumes are so high, so much is falling by the wayside that the homeowners are probably delinquent. They don't even know it. They don't even know it, right? So they go and they go, oh, okay, well, wait, I gotta make a payment. So they go online to make a payment, and then the servicer's like, well, you're delinquent. You can't make an online payment.
Oh, geez.
Okay, so I sent an email to the servicer. Okay, I need to make a payment. And they're like, call. So I call, you know, the homeowner calls and they get a voicemail message saying, you know, due to high volumes because of the coronavirus, we urge you to go to the website. So you go to the website, make a payment, can't make a payment. So you send an email, it says you call. You call, it tells you to go to the website.
Golly.
This really strange cycle of the servicers that will keep people. And I don't think the servicers even know that this is such an issue with homeowners. Wow. So that homeowner is going to look to refinance. They're going to look to go to a whole nother shop. They're going to look, and that would be the marketing tool. It'd be like, look, if I was a broker, I'm not, you know, but if I was a broker, I would be like, look, let me help you get out of this. Let me walk you through how to properly get your finance goals in order. Okay, stop dealing with these guys. You know, let me talk to you. So that is what would stop this industry from being messy. It doesn't have to be the broker side. It could be it could be retail LOs as well. Yep. It could be anywhere. But I think that a lot of the small to mid-tier lenders, everybody, that's what they're doing. We've seen it a lot in the credit union space. That has done it because, you know, you need to be a member of the credit union to get it. So they can use that membership. That's a great thing. You know, be a part of something. Join a part of a movement. I mean, that's what people are going to need. There's going to be enough fallout from this servicing debacle that there's going to be, in addition, and let me remind you, Josh, this is in addition to the business that will be coming. 78 million millennials still don't have a home.
Holy smokes.
Okay, so how's that for business, right? So good business structures, how can you capture both of those? That's what everyone needs to be thinking about. How can you do it in a professional and meaningful way?
Well, and I think you really nailed it, and that's what we're going to kind of end on, is you have to be more than just an originator. You have to be more than just a loan officer. You have to be somebody who can be a long-term, I don't want to say financial advisor, financial planner, but you have to be somebody who is knowledgeable, who can give them that long-term advice as a mortgage professional. You have to be there. Our good friend of the show, Barry Habib, always talks about it, is you have to be a mortgage advisor. How they can use and leverage their home and their equity to pay off debts, to do these things that you're referring to. So now more than ever, ladies and gentlemen, Jacob literally just dropped some knowledge on you. Again, I talk about content, putting yourself out there, but be that advisor to your clients. Let them, show them the options, educate them on what's coming. And again, Jacob just shared with you how to do that. That is one technique, Jacob, that I 100% agree. I think going into this new year, as some of these things are starting to come to light, as consumers are starting to have these, these calls with their current servicer, you have a huge opportunity. Everybody listening right now, you have a huge opportunity to capture new business. So Jacob, with that, I think that's a great place to end. Anything else you have for this week that we should be looking forward to?
Sign up for the emails, read the emails, got a bunch of stuff coming. All the information you need is in those emails. One read, no click-throughs, pretty simple.
I say click-throughs. We give you the stories right there. You don't have to go anywhere else. Click right below. Dal has posted all the links for Rise&Shred. If you guys don't already subscribe, you need to do it, because again, Jacob and our team do such an incredible job bringing you the most important news and the facts that you need to know about our industry. And we do it in a very fun, lighthearted way. So we appreciate everybody joining us this morning. Jacob, as always, we really appreciate your insight, your expertise, and your masterful experience within the industry. So appreciate you, brother.
Thank you, man. See you next week.
Right. Guys, we'll see you next week. As always, we appreciate you. We love you. And now it's time for all of you to go shred, go show up, hustle, repeat every day. See ya. Have a great week. Hey, what's up, everybody? Thank you again so much for joining us for today's show. If you like the content, make sure you hit that like button below. And if you already haven't subscribed to our channel, click right over here and you can subscribe to our YouTube channel. And if you want to see our latest video, click over here. And again, if you want to see the best of daily content within the mortgage and real estate industries, you have to subscribe now. We look forward to having you shred with us every single day.